And so I think what this shows is like as a use case, being able to create new tokens out of thin air and trade those tokens to me is like clearly a super high revenue generating activity, and one that people do continuously. Like even during this sort of quote unquote bear market or choppy market, people are still launching a ton of tokens. And so to me, I think we've just found a great use case.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey guys, welcome back to another episode of 0x Research. Today I am joined by just Westie. We've got a bit of a Danny Westie power hour. All of the, or pretty much all of the research team and a lot of the folks from the other teams at Blockworks are going to be at DAS this week. The lucky few that are left over get to have a little bit of a vibe session. How you doing, Westie?
I'm doing pretty good. Can't complain. Definitely a little bit of DAS FOMO going on. Just all the great people that are going to be there. Great speakers. James Kristoff, a man in the flesh. So definitely a little FOMO, but good to be here. Good to sort of take over 0x from Bach whenever I get the chance. So yeah, thanks for having me.
Yeah, sometimes it's good to mix up Boccaccio mode and get some Westie mode in here, get some data mode. We like to show the data product as much as we can. And I heard we know James Kristoff is going to be there. Supposedly he's got the creamy at the venue. He's going to be mixing up some crazy drinks. So if you're at DAS, hopefully you get a chance to meet him and meet the legend of the Telegram group. Anyway, I guess moving on, like just covering the market. I think we've been making this a bit of a regular thing, but how are we feeling in general? Like I think the vibes are definitely down in the dumps. Some people, we've seen the conversation around, is fundamental, investing back in crypto, look for fundamentals type of vibes. Memes are done. What are your thoughts? Is this just like we need some time to kind of, digest what's happening in markets generally, or how are you sitting?
Yeah, I have a lot of thoughts here. It depends on how much you want me to rant, but I've been basically the resident bear, me and James Kristoff, the resident bears of the 0x Telegram chat. And yeah, basically I got pretty cautious after the SBR announcement and just a ton of good news coming from the administration that the market didn't seem to care about at the highs. And so got pretty cautious and bearish in sort of the short to medium term from there. And the thesis has turned out correct so far. And sort of where we're at right now is this weird limbo state for basically everybody. Even the bears like me who think there's probably some more downside. We're sort of in this space where we might start to see some sort of echo bounce or dead cat bounce, whatever you want to call it. And then others who think this is some sort of cycle pullback, that we're destined for all-time highs once we get through some Trump uncertainty, that we're also in this weird sort of space where we're just waiting for that to clear. And so right now things seem kind of quiet for the most part. And are we in a bear market is a weird question. We're just kind of chopping, going sideways. It seems like every little thing that could spark controversy is sparking controversy. And maybe we talk about the Solana ad for a bit, but it feels like there's just not much going on. So when there's even a little bit, people are clinging onto it. And so while I have certain thoughts that I think we do end up lower, I think, and I also think that we don't see new highs within 12 months unless something significantly changes on the macro front or we get some sort of idiosyncratic catalyst for the crypto industry. And maybe that's like Lummis's bill actually having a strong chance of passing or something similar, of just like this huge catalyst within the industry. I just think we're due for just, I wouldn't call it like some brutal bear market we've seen in the past, for just a ton of chop, and just some time to digest all of the good news that we've gotten from the Trump administration. Just think like in 2022, the cycle started. We've seen incredible price action. Like Bitcoin itself is up 6 to 7x from the lows. A lot of alts did extremely well, depending on which pockets. And well, we didn't have that like alt season where everything goes up. Like some pockets performed extremely well if you're on your toes. And so, yeah, that's what I currently think where we are in the market. We're just kind of in this limbo, chop around, boring kind of phase.
Yeah, I think that's totally fair. It seems like across the board, whether you look at global macro, equities, crypto, like you name it, uncertainty seems to be the kind of key word right now in terms of, maybe chop, maybe up, maybe down. Who really knows? Seeing a lot of like, maybe it's time to touch some grass for a while. It is interesting to see like older tokens, like maybe a prior crop of like, you know, if you want to call them VC tokens or like, low market cap, high FDV things with vesting schedules ongoing, see big bounces. I don't know if that's late shorting activity, people looking for things to short now and then getting, liquidated out of those positions. Wouldn't be surprising if that is the case, but, seeing odd jumps in just kind of random tokens that like aren't in the spotlight, which is always odd to see. And then, yeah, I think your point definitely resonates around like what people are talking about and kind of the vitriol. We're very much back in like everyone is very angry and upset because prices are down, and they're very fixated on certain current events. So the big one right now the other day was the new Solana ad, which had the video has already actually been taken down. I don't know if that was the right decision. I guess maybe just for some quick takeaways, like I don't have the video to pull up, but the ad itself just focused very much on like this anti-woke philosophy. This guy at his therapist, and the therapist offering a bunch of like, well, maybe think about pronouns and gender terms and things of this nature, and the guy's like getting upset and angry about it, like, no, I just want to innovate. I think the general vibe that the community got was like, it's a bit odd to like maybe swing to this side or like try to attach yourself to one side of this like kind of political ideology at this point, this anti-wokeism kind of movement. My biggest thoughts, and then I guess if you want to jump in, is like, I just thought the ad was bad. It was long. It was like 2.5 minutes long. They're like sitting there, like driving this point home, like for over 2 minutes of just like, okay, what about genders? Okay, what about pronouns? Okay, what about like this thing or that thing or that thing? And it's like, man, I get it. You could have made this joke in like 30 seconds. I just think it was like a bit of a waste of time. It wasn't funny, like a bit old. Like maybe if they had done this like pre-election, it would have hit a little harder. But the timing just feels odd. And yeah, I just think they kind of missed the mark. Like I think my biggest takeaway right now is that people expect like a lot of quality out of Solana produced things at this point in time. And so to get something that's like just so clearly not that, is a bit jarring. And so I'm not too surprised, one, because markets are down and people are like, they want to find scapegoats right now, in terms of people being upset, but also just like, I think it's like a more of a surprise reaction of like, I saw comments that were like, I would expect the EF to drop an ad like this, but maybe on the opposite side of the political spectrum, but not Solana. So I think that's maybe a lot of the reaction that people are having is just like, it's kind of a weird vibe coming from them.
Yeah, I definitely like the biggest thing is definitely how they scripted it. Like if it was just one joke on the pronouns of this like 2-minute ad about America is back, I think it would have been fine. I think it was just they weirdly like dug themselves into a hole of just like continuously beating this one joke into the ground. And so I think they missed the mark completely from that point of view. And then I mean this is probably my like bearish lens coming out, and I'm happy to be like the resident bear until Bach kicks me out of the pod for another couple months. But it's also this like the way that I viewed it, like that like sort of immediately hit me was sort of it felt like a ton of hubris coming from the Solana camp of like you think back to 22 and 2023 where they were the underdog and they were the phoenix rising from the ashes, like they were supposed to be dead, and here they are like thriving, and they were sort of punching up, whenever you'd have someone like Mert or just the Solana community in general just like fighting back against FUD, etc. Like you built this really, really passionate community from the ground up that way. I think at the time it really hit hard because they were the underdog. And at this point, this just felt like sort of the opposite. And now that they've done extremely well and they're on top, it felt like punching down. And it felt cocky to me, to be honest. Like that's the way that I interpreted it at first. And to me, this is like typical of like late cycle things, of like things get over their skis, prices go up, and then people get really cocky and comfortable, and they make mistakes. And to me, this is one of those mistakes. I still very much respect the Solana Foundation and all of they've done. They have a super stellar team. I just think this was like one small mistake with an advertisement. I don't think this is some like big strike against them. Certainly, if prices continue to go down, they're going to get dunked on even more for this thing. But I think, yeah, just it's one small mistake that I think will blow over in due time. But I think it was just emblematic of they felt comfortable. They felt like they won, and now they can punch down. So didn't like it for that reason.
Yeah, I think that's a fair take across the board. And I think maybe the upside here is like counter to like late 2021, 2022, where we had Super Bowl ads for a lot of the large exchanges. I think your comment there about like being like a late cycle thing is interesting from that perspective. Obviously, this ad was just posted on Twitter. Like they didn't have to buy a very expensive Super Bowl commercial slot. So I guess really the only costs were just like the production budget, actors producing that, scripting that, etc. And it's, you can freely post ads on Twitter as much as you want. So they can, this is an easy recovery. Like I agree with you that like the ad shouldn't really mean anything, assuming this isn't like a vibe that they're like permanently entrenching themselves in going forward. I don't think that would be a good look for the brand or the culture there. But I expect, given that they already withdrew the tweet, that they're looking to maybe think a little bit more deeply going into whatever their next ad looks like. This episode is brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your crypto and logins, trusted by 7 million users and securing 20% of the world's digital assets. Follow the link in today's show notes to grab your Ledger now. So maybe just a good learning opportunity. I guess we'll see going forward. But I think it does highlight there is still a lot of like combatism over this like EVM versus Solana debate. I think you mentioned like, they're sort of the top dog now, but what's interesting is I think that the conversation on CT is still that like, I think people believe now that like Solana is a very consensus bet, and yet the community is still like, there's still this very strong like Ethereum, EVM, ETH aligned side of the community that is like, no, like the Solana vision is wrong or incorrect or what have you. And I think we kind of see that consistently in this topic of like, are memes dead? Have memes died? Is the meme chain Solana like done for now that memes are dead? I wanted to share a couple of tweets just to spark this off, but there was some back and forth between Umaroy and Toli on Twitter, talking about they had a longer conversation around like Ethereum's approach versus Solana's approach, which I'm going to skip over. If you want to read that, go ahead. But got to this conversation of like, isn't the most popular application just a factory for creating valueless totens? Totally tried to kind of shot back and said, it's like Ethereum, but faster and cheaper. Users can skip creating a valueless L2 and just launch a token instead. He went for the jugular and the funnies there. And then Cashflow's Connor and Max Resnick also commented on the same concept here, where Max mentioned, year-to-date revenue for Pump is higher than all year-to-date Ethereum protocol revenues combined, which really slaps back on like, it isn't Solana and isn't this like most popular app just this factory for valueless nothing. It's like if it's valueless nothing and it's outproducing everything on Ethereum, like I don't know, you're really not holding yourself to a very high standard there. And then Ryan added a little tidbit here that app revenues since 2016, so excluding the Trump kind of trading weekend and week that followed, Solana apps inclusive of Pump are something like 3x Ethereum apps in total revenue, and Pump itself is what 30% or so underneath all Ethereum apps combined, and above all BNB apps, all base apps in revenues. So I think it leads into this discussion of like, I mean, people are constantly debating this. Are memes dead? Is it over? Is the trade done? But I think interestingly, what we see is that sure, Pump revenues might be down, but revenues across the board are down for a lot of apps. And still today, like the most profitable and like highly active applications, things that people use are just simple trading applications. Like Hyperliquid is a very talked about, and I think people find this exciting for a lot of reasons, right? Big airdrops, et cetera, et cetera. But fundamentally, it's just a trading app, in the same way that Pump Fund tokens are really just a trading app and a speculative app. So I guess I'd be curious to get your thoughts. We can go into some of the data as well. We have a ton of data to look at, kind of what's going on with meme activity, and I'll pull some up. But just wanted to kick it off and get your thoughts. Like, are memes dead? What are your thoughts here? Like, this is what everyone is saying. Memes are dead, and now it's time for fundamentals. What do you think?
So a lot to unpack there. I think my thoughts. So to me, if you are running a blockchain, you're optimizing for one thing and one thing only, and that's REV. How much are people paying to be included in your blocks? Period. And the thing that's going to maximize continuous REV is constant activity. And for blockchains, like that thing is trading. Like that's the thing we found that has continuous activity. And with REV, you have priority access to state. So people paying more for priority fees or tips to be included, because being included now as opposed to later has like infinitely more potential in order to gain a profit. And so if you're maximizing REV, then really what you're maximizing is trading volume. And then what you're maximizing in particular is sort of retail lower quality volume, because that allows for more fees to be generated, higher spreads, which means more arbitrage opportunities, which increases REV. And so from that point of view, like the dunk that, all that's being launched on Solana are these useless tokens. Well, the useless tokens are driving all the fundamental value on chains, period. And that's Solana, that's Base. That's basically every chain that has significant revenue comes from this speculation on newly launched tokens. And those tokens can be worthless, like pictures of animals, or they can be this AI agent craze that we saw in December and January of this year. And so creating new tokens is a very clear use case. And to me, one of the clearest use cases of blockchains in general is the best casino on the planet. Like that is a use case. And it's something that people are paying, like willingly paying a lot of money for, is to trade these tokens. And so I think just hand waving that away and saying that like it's a low quality use case, I think is just wrong, because of just how much value continuously is driven. Even now, like you said, like year to date revenues, although I would probably maybe do some calculations on like the top of Bitcoin, and from that date on how things have done relatively, but I'd still say like Pump Fund is probably the number one app by a wide margin in terms of application revenue generated. And so yeah, I'm sure you have some good data to pull up here on the REV side.
Yeah, let's. I want to walk through some of the points you made. So you mentioned REV. I think when we look at network REV and we compare, top chains, we do see that recently, like there was definitely following this Trump weekend, and maybe it correlated as well with like the Bitcoin top or the events at that time, but we saw a bit of a peak here for Sol's relative dominance to other chains. I guess if we look at the kind of absolute value, you can see here that like that weekend of the 19th, the Trump token launch, was definitely a bit of like a blow off peak in terms of overall REV. There was a ton of trading volume and activity on that day. We'll see that reflected in all the charts, but as a percentage, Sol REV is still making up like 40% of the total across top chains. And Ethereum has actually seen some expansion within this category in the past few months, but it's hard to say how lasting that is. I think the more interesting thing is that we're seeing like Tron and BNB take some meaningful share. And I don't, I think to some extent like BNB had a bit of a meme craze as well. It seems like some of that might just be in maintaining the amount of activity that they had. At least on Tron, for example, like we know a lot of that is associated with stablecoin activity. So if they've just maintained their relative level of REV as others have declined, like we just saw in the absolute value chart, like then you'd expect to see an increasing share here. But when we zoom out, like this is still incredibly constructive Solana and a not very constructive ETH, is what I would say on the weekly basis, where Sol has kind of just been grinding up and then taking more and more of like global REV, if you want to call it that. And you can see sort of the big upticks in, I guess if we look back here in December of 2023, just as the meme craze and like trading activity on Solana was about to start like ramping up, really kicked off through into 2024. We had that sort of down period in the like late summer going into the election, and then post election a bunch of trading activity again, which I think just fueled kind of that recent peak here, but still a significant share. And then you mentioned specific applications. And I think I hate the colors on this because they're so similar, but if we break this out, like some of the largest today are, we'll see Jupiter in there, we'll see Hyperliquid, we'll see Pump, and PancakeSwap is another one, just the BSC DEX. So it's not surprising to see, like, when I go down this list in its entirety, it's like, okay, Token Launchpad, DEX, Photon, Bullx, Trojan, like multiple trading bots, BonkBot, a couple wallets, multiple other DEXs, and then MakerDAO makes it up in there, and Hyperliquid. So really, yeah, when we look at top applications by revenue, it's all trading. Like, and whether that's speculative trading, whether that's all pump fund coins, or if it's just memes generally, or if it's other assets, like we've seen fundamentally that just trading drives so much of the revenues, like you said, and we see that from kind of the blockchain REV breakdown and where like share has gone there, as well as just in application revenues and where like total aggregate revenues are going on a per app basis.
Yeah, I also think what's interesting on the share piece is you see change like BNB and Avalanche gaining sort of percentage market share of REV, but a lot of that's also coming from like trading meme tokens. As of recent, like Avalanche has had a couple breakout memes. Maybe we'll get to like some of the base data. Like Clanker has also been chugging out a bunch of new tokens as well. And so I think what this shows is like as a use case, being able to create new tokens out of thin air and trade those tokens, to me, is like clearly a super like high revenue generating activity, and one that people do continuously. Like even during this sort of quote unquote bear market or choppy market, people are still launching a ton of tokens. And so to me, I think we've just found a great use case. Yeah.
I like that you highlighted base tokens, and this the AI trend I think is more interesting. Like there's probably a better question to ask of like, is the AI trade dead more so than are memes dead? I think a lot of AI tokens were sort of a subset of like a meme category basically in the past few months, and what we're seeing on base, like in terms of AI agents, like largely from virtuals, is that volumes have gone from what were significant like 30 million, 50 million, a peak of 60 million on AI agent token volumes, down to less than 1 million a day in the recent week. And actual like tokens launched from hundreds down to maybe 1 or 2 or a few on a daily basis. So like that excitement, that flywheel there is completely gone. When it comes to memes generally, let me just jump across to, we'll come back to base, but we'll do the pump comparison as well. When we look at pump specifically, there's definitely been a drawdown, and this highlights it perfectly, but new tokens created from a peak of like somewhere in the 70,000s a day down to maybe 20 something thousand. And we can also look at graduations as well, where graduations peaked at somewhere around like 1,000 a day and now down to a couple hundred. So yeah, like a significant drawdown, like 80%, but not like a disappearance of the activity like we're seeing with some of the AI like specific platforms, where it's basically completely dried up, which is interesting. Like that's such a marked, like significant rise in activity, like massive blow off, and like tons of excitement around it, to see it actually trend entirely to zero in the span of a few months.
Yeah, it's pretty wild to see. And to me, what the data is showing me is, like I said, I think we've found a great use case in being able to create tokens from thin air and trade them. But it's clear to me that sort of the form factor of that is going to evolve over time constantly. And so that sort of like, you can look at that as like, okay, what sort of form the tokens take. So started with like animal memes, then it became AI agents, and then it became sort of like tech startups launching tokens, and like the form factor is going to change, and it's also going to change where these tokens are launching. So they were launching on Solana all cycle, and now you see a resurgence on Avalanche and on Base. And so I think if you're trading these things, you sort of need to be on your toes about how the meta is evolving over time, and where you need to be to catch the next wave. So to me, that's sort of my takeaway from all the data you're showing.
Yeah, I think that's a great point. That's I think this is something we've debated. I know Boccaccio would get heated in an argument like this. We've had some debates over, but I agree with this premise that like we're, I think, naturally are going to see these shifts in like the types of things get traded, or if it's like the specific mechanisms by how they're traded, but not necessarily like a shift entirely away from this like speculative trading activity. I think people call for like, at some point people will just stop trading memes, and maybe they will, because they'll trade something else that captures that speculative trading activity. But I think fundamentally, like this outlet of like that type of like desire for significant upside or like volatility on a short-term basis, like it's targeting a particular like type of user that like wants to spend money in a certain way, and is like has certain hopes about what type of returns they might get with that, in the same way that like lottery ticket sales are basically up only year over year, and sports betting like is up only over the past few years. Like parlay bets have seen explosive growth. Like people love them, even though on aggregate they lose more money on them. I think it plays into some of these things. So yeah, it wouldn't be surprising to see like the category of the day, or even like the platform, slightly change. Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduced the world's first secure touchscreens, making it easier and safer to manage your transactions and assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional passwords and enhancing your digital security. Follow the link into today's show notes to get started with Ledger today. And I think we're seeing that here, like to kind of segue this into what you were mentioning around like keeping an eye on where things are going or where things are happening. Base has seen an uptick in Memecoin launch activity from Clanker and this banker bot as well, where tokens here, this massive rise of like a few hundred tokens a day from Clanker to like 10, 15,000 a day, massive uptick, like what, on the order of 30x or so, is being fueled, it sounds like, partially by like interactions on various platforms. So like tweets that can call this banker bot and then like spin up a token and associate it with like a Twitter account, for example. And people are just kind of playing into this, and it's spinning up that flywheel a little bit. I think this was played with a little bit last summer, where we saw there were a lot of pump fun copycats last summer, like on BNB and Tron, that tried to play into that narrative. And I think one of the early ideas was like, yeah, let's make memes directly from tweets, and like, let me just like comment on this tweet and make it into a meme coin. That didn't really like turn out well, but this has a little bit of a different spin on it, where this banker bot and like people interacting with it are able to essentially like associate Twitter accounts with coins and other things. And it's not necessarily the case that like, there's some conversation on like Grok made a token. It's like not quite the case. Like somebody prompted Grok and like used it to come up with some details, and then associated like the Grok account with like the wallet or the token that was then created using this like bankerbot integration. But either way, that's kind of where the excitement and the sentiment is now. Let me pull up this tweet here, this thread. There's some details here from Privy talking about bankerbot, and it's just saying, you've seen lots of buzz about Grok getting provisioned a wallet on X to raise funds for U.S. debt relief. All of this is powered by a banker Clanker, one of the coolest implementations of Privy server wallets. So basically what they do is banker's an agent that allows people to execute transactions from Twitter. So like I was mentioning, and then they're using Privy wallets under the hood. So if you can tag bankerbot and, basically tell them to spin up a token or spin up a wallet for a particular account or address, then that, that Twitter account, that those credentials have access to that wallet. The Grok account could theoretically like gain access to this wallet that was created for it. It seems like mostly people are having fun with it, but the numbers are pretty crazy. Just going back to the data we have, like I said, seeing launches in the tens of thousands a day is a significant uptick for base. And we saw, I think, a few months back where there was a bit of like a base kind of like meme trend, and it tapered off. I guess I'll just be curious to see, like, is this durable? Are people having fun with this? Does it have like sustained interest? Because we haven't really seen that yet.
Yeah, I think all this is really cool. I mean, just think of some of the biggest tokens to come out of last cycle. It sort of, like, you think of GOAT as an example, like it came out of a tweet and an interaction between this AI agent account and another account that created a token on Pump Fun. It is just like sort of streamlining that, where any prominent Twitter account can now actually be attached to this token and launch it straight from Twitter and allow for that like super fair launch ability. And so I think from that lens is really cool. Again, going back to like what we talked about earlier in the pod, like if you think we're in this like choppy sideways market, is there enough momentum for there to be a sustained sort of game or like iteration within this sort of mini cycle, if you will? I wrote an interesting blog post, which was basically me trying to recount the cycle from the trenches and like why I thought the sort of game that we were playing was oversaturated. We had sort of reached, like a saturation point within the game because we'd gone through enough iterations where there wasn't like another thing to top the last iteration. And so we needed the trenches to cool off for a while. And so you should be on the lookout for like what sparks that next sort of, like, people talk about the euthanasia roller coaster. And so we're sort of in the downward spiral now, but at what point do we see the sort of the opposite, where we start to see the roller coaster in the positive direction? And maybe that starts now, but you have to sort of think of these things within the macro environment. And my take is probably that this is like a short-term little bump, but things sort of calm down from here. But it's one of those things, you gotta look out for. If you like trading these things, you need to pay attention to what's happening and develop a thesis. But overall, like, it's really cool that we have access to this data. Like all of this stuff is on chain, and that us at Blockworks Research, we really think that on-chain data is like, we say, improve the data, improve the industry. And we think that like having access to this on-chain data really makes for everyone in the industry, whether you're a trader, whether you're working on one of these protocols, to make better decisions. And I think us running through this is a perfect example. We were able to perfectly dissect what's been going on within these trenches in 15 minutes, and in really seeing points from many different angles. And so, yeah, glad we walked through this today.
Shameless shill for the Blockworks data product. We love that. And I think your point about kind of using the data to understand what's going on rings true for another recent event, Solana's SIMD 228 proposal and vote. Sparked a little bit of controversy as well. And there's this great dashboard, not on the Blockworks platform, but on Dune from Kagran Zero, going into who voted what, basically, and a summary of the votes and how much stake was voted, etc. But we had close to 1,000 validators voting. Upwards of 75% of stake was voted, which is pretty impressive. That's a ton of participation. And then I think the big thing that I want to dive into is there is this kind of ongoing, or sort of, there was this narrative that people had that the sort of staking as a service cartel kind of caused this vote to not go through as expected. And when we look at top validators by votes, as well as like how they voted, we can kind of get a feel for maybe what they mean there. So some notables that didn't vote, like Binance, did not take a stance here. But when we look at like Coinbase and Galaxy, it seems that these guys, voted maybe in alignment with some of their key stakeholders or constituents, however that may be. They didn't take like a particular stance here. So it sounds like they sort of maybe listened to the aggregate of some key stakeholders to make their decision. Can't really fault them there. I think these guys are servicing a lot of customers, so that makes sense. Helios generally voted in favor there. And then some of the big names that stick out are like Ledger by Figment. We've got Everstake, P2P.org, TwinStake. I think this is this sort of idea here that some of these like staking service validator teams that basically take a commission on the yield from staking rewards that are generated. This was sort of the opinion, I think, of people online, that like this didn't pass because those guys said no, and like they weren't going to let it happen. What's interesting is when we look at validators voting by stake level, we actually see that at the top end of the curve, most were in favor. Something like, so upwards of 65% with stake over 1 million were voting in favor. Whereas at the bottom end of the curve, smaller validators largely voted against this proposal. So I don't think it's so cut and dry that like these large staking service validators killed this proposal. More so like a combination thing here of, I think there were clear opposition arguments in terms of like smaller validators might not be able to remain viable or competitive with the change to the dynamics. And so I think it's natural to see them vote against this as well. And those seem to be maybe the two large groups that played a factor here. I guess I'm curious on your thoughts here, Westie. Like, with this data in mind, like my expectation would be that, if there's still a goal here to change how the staking rewards work on Solana, that, you would want to dive into this data, analyze it a little bit, figure out like how you might modify a proposal to get more of whether it's the validators at the bottom or some of these validators at the top to align with you. What are your thoughts?
Yeah, I have a lot of thoughts here. I mean, based on what you just said, one of the things we do want to dive into at Blockworks Research is what we call governance data. So things around these lines of important governance proposals, in particular, like especially protocols with delegations and a lot of past votes, like looking at data at how teams and entities have voted over time and how that might translate to future votes is like a super interesting sort of data science like lens to look at these types of decisions. So first of all, like having the data available again is like really, really awesome that we have this. at a high level, my takeaways from the vote in general are, so I typically, when you're looking at, especially an L1 blockchain, there's sort of 4 entities that you need to sort of strike a balance in their power in the system. And you have validators, you have stakers, you have protocols, and you have users. And like those 4 groups, you as an L1 blockchain need to sort of like make sure you're playing all of these sides, and that you need to be very particular in the trade-off spectrum of like how much power you're giving to each of these groups. And there's interplays between some of these groups, like the validators and stakers are sort of a back and forth, and that comes typically through like commission rate. But this is, I think, a perfect example of that balance as well, in that the validators themselves were the ones that really had most of the power. And I think the reason why you saw the like the biggest validators voting yes, was because they were able to strike this balance between the stakers and the validator. They were able to take input from their stakers to say, hey, you guys, like, what do you want to vote for? And typically, like, your typical staker or your user, like your community member, was in favor of this thing. And so the larger validators, that's why they leaned sort of in the direction of yes. But when it came to the validators that didn't have that input from their stakers, that had this unilateral decision to vote yes or no, they typically voted like 100% no. And that was a majority of the reason why this thing didn't pass. And so I think in general, Solana has made some decisions to give validators a little too much power. And that goes by like not burning some of the transaction fees and having those go to validators. I think if this is how we want to set up governance, then validators continue to have a lot of power because they can choose whether to listen to their stakers or not. There needs to be some sort of enforced mechanism for stakers to like force their vote, that like maybe if they just like don't vote at all, then the validator can have a say, but they should be able to override. Cosmos has this kind of system. And so I think there needs to be just more checks and balances and more thinking from like a mechanistic point of view to make sure that they're properly balancing each of these individual groups and their power within the system. I think Barachain has done an interesting, like, not to like pivot to a whole different chain, but they've done interesting things of like balancing different user segments, and that they're trying to give a lot of power to the protocols and less to the stakers and validators, and create a flywheel of applications. And I think that's like an interesting point of view and point on the trade-off spectrum that I hope other new chains take, of like really prioritizing protocols and users versus these like passive stakers or validators in the network, and which like have traditionally held all the power in proof of stake systems in the past. And so over time, I hope, we see more experiments in how we balance power between all these entities. And that's my SIMD 228 rant right there.
Love it. I think, it's unsurprising, and I think it's natural to expect that there will probably in perpetuity be these like conflicts between different groups with different sort of like voting capabilities. I think you can relate it and compare it to like the traditional voting systems of various governments. I think maybe one of the bigger concerns like out in the political world is how money affects politics, and like, how much does your vote really matter? But in this case, it seems more about like who has the voice and the capability to like make or decide a vote. But to that point around money having some power, I did want to bring up something that I found interesting was Fried Rice or Xiaofan Shu got into this interesting application of permissionless trading, really, in that they made, in the original tweet, made 10% of our vote on SIMD 228 available to buy on Meteora. So literally just put up a trading pool for their vote and said, go at it. If you want to buy our vote, go ahead, and then you can vote. And then announced at the end of it, we did sell 10% of our vote for 19.2 SOL, so a couple $1,000, which were distributed. And then they distributed those rewards to, some SOL holders, for their protocol, etc. But I guess just an interesting dynamic here that might have to be addressed or talked about going into the future of, there's a less of a blurred line between money and voting in these systems, especially when you can just directly tokenize your votes and put them up for sale. That's not quite how it works in the traditional political system. Maybe in some countries, not all. I think there's usually a little bit more of like smoke and mirrors and some more obscured things happening behind the scenes that and kind of enable some like money to have power over elections. But in this case, it's more direct, and I do wonder like if we see a trend here where people become concerned about like the direct monetary purchasing of future votes going forward, if this like sort of practice becomes an adopted thing. I could see if you're a smaller validator and maybe you don't hold an opinion in a proposal, why not put your votes up for sale? I think you'd be directly incentivized to do so if you don't have a particular up or downside to whether that vote is yes or no, or like if you don't feel impacted by the outcome of that particular vote. So it's an interesting like maybe point of future discussion that might come up again.
Yeah, I always thought we'd trend in this direction, especially after last cycle, the creation of Curve in VE tokenomics. And basically, like, there's this like distinct bribe in order for people to like direct emissions to their desired pool. I figured that would translate to a more like actual governance system at some point. I think it sort of depends because most votes don't really have a change in sort of like monetary outcomes, but something like this where validator staking rewards are changed, I think because there's that monetary component, it makes sense to put a price tag on the vote. I also think it's interesting, like these types of agreements certainly would happen anyway. And the fact that it's on chain and transparent, I think is better than it being, like you said, smoke and mirrors behind the scenes. Like if you're gonna do it, I'd rather have it on chain and available. And that's similar to the MEV infrastructure we've sort of gotten to on ETH-L1, where like the fact that it's like available to anyone, it's democratized, transparent, is better than it being a dark forest. But there's still this question of like, should it be even allowed anyway? Like, should we allow sandwiching? And in this case, should we allow governance votes to be swayed by money? Like, clearly that's illegal in real elections. So why do we allow it here, kind of thing? And maybe there needs to be like a lay of the land. Like the problem with having completely permissionless systems is you can't really, if you're trying to be intellectually consistent, you can't really hammer down and make rules necessarily. You sort of have to force them in this direction of being on chain and transparent. But it's an interesting question. And I think we're just going to see more and more of this, and we're going to have to deal more and more with this question of whether it's something we want and how we want to do it.
Yeah, I think that's a great point. I do think that like there is one point here that fundamentally all these systems come down to like a social consensus component. And so like if a network really decided, like if the overwhelming majority was of the opinion that like, no, you should not be able to sell your votes for, direct payment. You could think of any number of systems, right? Like it's all transparent on chain, right? You can find all those entities and say like, hey, you got a warning. If you do it again, like you're out. And then you can just like blacklist them from the network. That's like a really extreme example, but I do think that's how a lot of these conversations and like decisions ultimately will get made going into the future, is just like, what's the sort of social consensus around this thing? What's the agreement? What do people think about it? And I think we've seen that with like various types of things where the outrage is always like, these are supposed to be permissionless systems. Like I can do whatever I want. But then like when somebody puts like a racially charged like Memecoin on chain, and then, front ends like Dex screeners say, well, we're not going to show those because those are kind of weird. And like people don't like that. You just see where the gray zones and like where the rubber hits the road. Like when people get upset, like, you're bound to see reactions to these things, and social consensus ends up defining a lot of this stuff, regardless of if the system itself is like ideally meant to be permissionless, what have you. But yeah, good points all around. I think you covered that beautifully. Have you been getting silly on chain this year, farming on 10 plus wallets across different ecosystems? Well, CryptoTaxCalculator is here to help. CryptoTaxCalculator has 3,000 plus integrations to support all of your wallets, exchange accounts, and on-chain activity, and a custom pricing oracle to handle even the most chaotic portfolios. Get started today and make tax season easy. You can use our exclusive discount code BW2025 to enjoy 30% off all paid CTC plans until April 15th of this year. Follow the link in the show notes below to get started. And I think it leads into maybe just one last point that I wanted to discuss that I think a lot of us have maybe been weighing recently. I know Dan Smith, he had a funny tweet remarking on a Gwart tweet about how Robinhood, the basic gist of the tweet was that, so we really built all this open source tech and Robinhood is going to roll in and just like copy it all for free and make all the money, huh? And Dan Smith has been remarking that like, wow, I've been really thinking about this for like a week now. But I think it's an important point, and I've been thinking a lot about this point as well, that there's like this spectrum of businesses and like potential outcomes going into the future that hasn't needed to be as like prominent as of a thought in prior cycles, where like real adoption like via institutions or TradFi businesses was still very far away. Today, that's not the case, right? With the sort of loosening regulatory regime and like the sort of expected onboarding of maybe traditional, partners to and like users of crypto technology and like blockchains. There's a like a nearer future of TradFi businesses or like existing fintechs like really delving into this world and competing with like the existing DeFi teams and solutions that exist. And so like the main thought here is that like, if you're a big DeFi guy and like maybe you love Aave, do they really win if if the fintechs of the world, if the Robinhoods, or if at some point in the future the slower movers like the Fidelities and the Bank of Americas, the big money houses, come in and say, well, there's all this great open source tech, like let's just copy how Aave was built and then just serve that straight to our users. We don't even have to pay Aave a fee for it because it's freely available for us. I'm curious any thoughts you have here. This is something I've been weighing. I think there's a lot of models. I think a good example to maybe like kickstart this convo is like Morpho and the Morpho and Coinbase partnership, where it's a bit hairy because there's a lot of things going on here, but basically like Coinbase is now offering this, lend your Bitcoin, borrow USDC, and it just natively uses Morpho on base in the background that users don't have to worry about, which is a cool integration. Just like a CFI DeFi direct connection of like making use of these, DeFi on-chain lending markets, but Coinbase CFI customers can access that through the app or their phone, etc. And it's super easy. All the complexity is obfuscated away. But there's some differences here. Like, I don't know that Coinbase is like doing this out of the goodness of their heart. Like they want to offer a good product to their users, but also like they're invested in Morpho. Like CB Ventures backs them. They're Morpho's part of the base ecosystem fund. So like they're incentivized to like participate in the upside of Morpho, I guess, if you want to call it that. If Morpho does well, like that's a win-win for Coinbase as well. So I guess I'm just curious on your thoughts, like leading DeFi teams, leading CFI teams, and then like potentially in the future leading TradFi teams. Like there's a variety of outcomes here. It's really, I think to me, it's not clear who's going to win.
Yeah, I have so many thoughts along these lines. So in terms of like CFI coming in, this is the thesis I've had for a long time, or at least like a potential future where, like you said, these systems are by design open source. And I always thought, well, if JP Morgan wanted to come in and fork Aave and all of a sudden seed it with a bunch of liquidity, like what's to stop them from becoming like a power player within this industry and competing directly with Aave, etc. I think in terms of the moat that these DeFi protocols do have is that like liquidity base. So but I think these large like financial institutions would be able to seed their own liquidity pretty fast. And there's also this mechanism of these DeFi teams are constantly iterating on their products, and the moat is actually the team that can come up with new novel mechanisms. Like you're betting on the Uniswap team to come up with Uniswap v4 and eventually maybe v5, versus just having someone fork code and being able to utilize it. So there are some moats, and I'm sure a good resource on like DeFi moats would be Felipe at Thea. He's had some good thoughts on like how DeFi protocols can create moats. And so there's sort of that lens to look at things, and we'll come back to Robinhood because I think they're going to be the perfect example of CeFi coming in and potentially strong arming DeFi. But you brought up the Morpho and Coinbase example, and I think this is an interesting one because Coinbase is sort of losing value in a sense. Like if they were perfectly rational and trying to, I guess, better their own revenue and interest, they just fork Morpho and then have their own basic lending protocol that they're taking the fees from. Instead, they're just incorporating Morpho into their backends. I mean, and the way Morpho is designed is like you have like individual pools with their own individual siloed risk. And so Coinbase could very easily sort of create their own pools and generate revenue that way. They are dogfooding, again, like you said, their investment, but also in their eyes, they're trying to create more applications on Base that then create a sort of a flywheel and synergies across these protocols that, like, one, increase the value of Base itself, but then also if there's more stuff to do on chain, crypto itself becomes more valuable, and there's going to be more assets to trade. And so Coinbase as a whole is going to benefit from that. And I see that sort of point of view and that trajectory. But I also see the opposite view, which is sort of the Robinhood point of view, which we're starting to see now, is they just launched their own prediction markets. Like they sort of teased it with the election last October, but they've now like officially launched their own basically poly market competitor. And they're going to be a great example of, rather than teaming up with protocols to launch on like their chain and these third parties, like maybe they've invested in, or they think because they enable them that the value is going to accrue back to them, rather than going that route, they're going to have their own products that they can sell to their users and that they accrue all that revenue. And to me, I like this approach more in terms of value capture. And I'll tell you why. I think the point of view in particular that Base is taking of like, we'll just build this platform, we'll allow third-party developers to come, we'll eventually get value from this. I always think back to, I think it's John Charb has this, where it's like application launches on generalized chain, application gets product market fit, then application becomes their own app chain, and like they leave, and then the app chain wants to become generalized, and there's like this like constant cycle. And so if you're building this generalized chain for third-party apps and the apps take off, what's to stop them from trying to like verticalize, capture all the value for themselves, and all of a sudden you're left with nothing? Versus the incubated route, which Robinhood is taking. You're seeing Arbitrum with like their on-chain labs start to do this. Like you start dog fooding your own product that way, and because you own it, not only do you capture all the value, but there's no risk of leaving. Like that is your product. It's going to stay. It's going to continue to provide value, and the synergies would still exist if a third party did want to come. They now have access to these like infrastructure, to these primitives, and they don't have to worry about them leaving either. Like they know it's there. They know it's part of sort of this curated platform of projects. And to me, Robinhood is like going to be, I think, the biggest giant in the room that has a chance of being successful in building. They're starting with prediction markets. They're probably going to build their own DEX. They're going to build their own lending protocol. Like you can already see it coming. And I think if there's any hedge, if let's say you're heavily invested in DeFi, to me, Robinhood is like the obvious hedge in that future. That like if DeFi doesn't make it and it's actually centralized parties capturing all the value in DeFi, like Robinhood is poised to take that market. So I know that's a long rant overall, but I think there's a lot of like different trade-offs being made, and that Robinhood's the big elephant in the room when it comes to DeFi value capture.
Yeah, I think that's a great point. It's interesting because I think this is how people think about Coinbase today as well. Just the growth of their exchange, but then also the growth of Base. There's sort of like a multi-layered bet there of like you can maybe get the growth of DeFi and the growth of like just generalized DeFi fintech platform, all via Coinbase. Binance is maybe the other one that like kind of got left in the wayside, at least in the West, not looked at so much. But like cycle over cycle, or I guess when we look back a few years, it seemed that for a while, like maybe Binance Smart Chain, like the sort of Binance Exchange and then Binance Smart Chain relationship was like maybe more of a focus for a time. But it seemed to have fallen by the wayside over the past few years. It seems maybe recently they're changing that, and I don't know if that's because they're seeing the, if you want to call it, success that Coinbase is maybe having with Base, or just like maybe they're starting to see the possibility of that flywheel effect really like kicking into gear, and they want to like ramp up that activity again. But either way, I think it's interesting to see that, and I'd agree with you that like I do think that these types of businesses, if it's Binance, if it's Coinbase, if it's Robinhood, what have you, like they're in a really, really strong position to like Vlad Tenev's point from Robinhood of like the open source tech is out there. Like we can hire crack devs and engineers to build this stuff and ship fast. And we know they're willing to ship fast, right? Like these are the teams that are they're already on the leading edge, right? They're like known for being the like at the head of finance in the sort of like traditional kind of finance world. And so it's not surprising that like they can sit here in this middle spot with a ton of existing customers, a ton of capital that those customers have on their platform, and say hey, maybe we do want to try this like DeFi thing. Let's spin one up. We'll offer an incentive or a bonus, or like let people know it's there. And if our customers want to put a bunch of capital on it, like that's great. We can seed that real quick. Versus like DeFi teams that have to kind of struggle to find PMF and like build up their moat over time. It does. When I think about Morpho, the thing that I do find interesting is that their particular design was in this was it in favor of this future specifically. Like their goal and their like idea of building was like, yeah, like let's totally change up the way that the lending protocol is built. We'll have all these like isolated pools, and then we'll build vaults on top of that. And then if anyone wants to build a vault, like they can. Coinbase could build a vault. Maker can build their own vaults, and then they can charge like their own performance fees on top of those vaults. And if at some point in the future we want to charge like a small fee on the markets underneath, we can capture that. And like I think the idea there is like maybe that's enough incentive for these other, like if it's DeFi businesses, if it's CeFi businesses, like hey, maybe they'll just adopt that. They'll like eat the little fee on the bottom for us offering the service, but they get this like ease of just like, hey, we get access to the markets, we can drop a vault in, we can take the performance fee on that vault. Like that's a pretty good deal. We don't even have to build anything. And I think that's the bet that they're making. And it's interesting. I wouldn't be surprised to see that like do well here, or like maybe see some adoption here as teams are like maybe weighing the value of getting into this space of like we're not sure we want to spin up a whole DeFi team just to build some apps that we don't know are going to be successful or not. So I think the Morpho approach makes sense from that lens, and it's interesting to see other lending protocols like try to spin up their own kind of similar designs here. I'm just curious how that model can be adapted to other products, because like a DAX, like a Launchpad, like those are really easy. I don't know how you like prevent a Coinbase or a Binance or a Robinhood from just coming in and spinning up a fork of like the most common DAX, because those are pretty simple. But the Morpho one is interesting.
100%.
Cool. Well, we're over an hour here. I think we've spilled our thoughts and guts out for enough time while the boys and girls have been partying at DAS. So we can call it there. I guess any major thoughts, any key takeaways that you have, Westie, right now, like if it's for this week, if it's for the next 6 months, the next 5 years, like how are you feeling? What are you thinking about heavily right now?
Yeah, since I'm the resident bear, and this is probably the last time on this pod for a month or so, Like, touch some grass, people. Like, especially us in crypto, we can spend way too much time on Twitter, on our laptops. We've been given a gift in the market of just like sideways chop. If this is not a market you thrive in, like, definitely do some things to better your mental health, to, yeah, like I said, touch grass. But overall, like, the space is not going away despite my bearish sentiment. It's very clear that we're in an extremely positive administration when it comes to crypto, that institutions, nation states around the world are now coming to grips with the impact this industry is going to have. Despite some of the crazy crime going on, crazy speculation, there continues to be people chugging away at quality products, use cases. And so don't get jaded. Even if prices continue to fall, pay attention, be patient, touch grass, and we'll be back in no time. But yeah, I'll leave those as the takeaways.
Fair takes. I think you're pointing out that the market has actually been pretty favorable to those of us affected by seasonality. You know, if you locked in for the winter and you made some gains, like maybe go touch some grass for spring and summer, enjoy the nice weather, go play outside, do your thing, do whatever you do, go for some walks, take your dogs out, etc., and have some fun. And yeah, we'll keep chugging along. The industry will keep chugging along. I think longer term, we're expecting good things, but yeah, it's if you haven't been outside in 3 months, maybe it's a good time to like open the door and like we always say, touch some grass. But for those of you that are maybe at DAS or got to go to DAS, hope it was fun. Hope you met and chatted with a bunch of the research chads and data guys and advisory folks and all the other Blockworks and people from around the industry. Ton of great speakers there. Hope you have fun, and we will see you guys next week. Thanks for watching.
Thanks for having me. Peace.